Ladies and gentlemen, good day and welcome to Jinkushal Industries Limited Q3 and 9 months FY26 results earnings conference call hosted by Equibridgex Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touchtone phone. Please note that this conference is being recorded. Before we begin, a brief disclaimer. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company and may involve risks and uncertainties that are difficult to predict. I now hand the conference over to Ms. Chandni from Equibridgex Advisors Private Limited. Thank you, and over to you, ma'am.
Thank you, Palak. A very good evening to everyone. Welcome to the Q3 and 9 months FY26 earnings call of Jinkushal Industries Limited. From management team, we have with us today Mr. Abhinav Jain, Whole-Time Director, Mr. Sumit Belia, Executive Director and CFO. We will have opening remarks from the management team, post which we will open the floor for Q&A. With that, I would like to hand over the call to Mr. Abhinav Jain for opening remarks. Over to you, sir.
Good evening, ladies and gentlemen. The first 9 months of FY26 mark an important milestone for Jinkushal Industries. Standalone revenue grew 27% year-on-year to around 184 crores, reflecting sustained export demand across our markets. During the same period, we strategically positioned our 70 crores of overseas inventory, the highest in our history, strengthening our distribution reach and supporting a shift towards deeper customer engagement and improved realization. These actions reflect our focus on disciplined expansion, improved revenue quality, and building a globally competitive export business. Since our incorporation in 2007, Jinkushal Industries has steadily evolved into India's largest non-OEM exporter of construction and mining machinery. Over the years, we have built a differentiated and asset-light business model that integrates sourcing, refurbishment, customization, logistics, and international distribution. Today, our presence spans more than 35 countries, supported by a diversified supply network and an in-house refurbishment infrastructure in Raipur, which acts as a hub-and-spoke model, along with a designated partner facilities in India and overseas markets. Our operating model continues to rest on 3 complementary verticals: exports of new and customized equipment, exports of used and refurbished machines, and the development of a proprietary brand, Hexel. Each of these verticals reinforce the others, allowing us to provide end-to-end solutions across price points and customer segments. During our current quarter, we undertook a deliberate and strategically important step in our evolution. Historically, our overseas inventory levels were modest, around 10 to 15 crores, reflecting a predominantly wholesale B2B export model. In current period, inventory at our overseas subsidiary level has increased approximately to around 70 crores, the highest level in our history. This was not incidental, but it was a conscious decision which enabled the position of the company with strengthened liquidity position of our IPO. By positioning inventory closer to end customers, we aim to shorten delivery timelines, expand direct end user and retail sales, increase the share of higher margin refurbished machines, and enhance revenue realization over time. While this approach involves a relatively longer operating cycle aligned with retail-led execution, it represents a structural shift towards building a stronger and more resilient global brand and global distribution network. During early December, certain tax-related clarification in Mexico, which has historically been one of our most significant export markets, led to temporary purchase deferrals by some importers at the end of the calendar year. It is important to emphasize that this was a timing-related development alone, rather than a structural demand issue. On the contrary, as per our insights for the customer engagements in Mexico, the demand this year and the years to follow is supposed to increase in Mexico, given the promoted strategy of the government for various reasons. The inventory we have accumulated remains healthy and high in demand. We expect conversion into revenue and profitability in the normal course of business. In response, we proactively have strengthened our execution across markets. The strengthened presence in markets such as UAE, South Africa, etc., support diversification and reduces concentration risks across geographies and have enabled us to grow 27% on a standalone basis compared to the same period. We have continued to invest in our Excel brand, which represents an important long-term growth vertical for the company. Excel products are designed to our specifications and supported through our global distribution network, enabling us to participate more deeply in branded equipment sales while maintaining our asset-light operating philosophy. Investments in international exhibitions, marketing initiatives, and distributor partnerships are being undertaken to build durable brand presence and strengthen market access. The strengthened capital base following the IPO has enabled us to expand overseas inventory, reinforce export execution, and accelerate brand and distribution initiatives in a disciplined manner. These investments are directed towards building long-term business strength and sustainable growth. The decision to utilize current liquidity towards marketing, exhibitions, and strengthening our global execution has been taken, which will reflect in the current period and the quarters to come, which shows and reflects our confidence in emerging business opportunities for our company. While these investments are expense in the current period, but they're intended to enhance distribution depth, brand visibility, and long-term profitability along with recurring revenue. From an industry perspective, the global used construction equipment market continues to benefit from structural tailwinds. Infrastructure development across emerging markets, cost advantages of refurbished machinery compared to new equipment, growing rental ecosystems, sustainability-driven reuse trends all support the long-term demand environment in which we operate. Our positioning across refurbished exports and emerging geographies aligns well with these drivers. Our competitive advantage is built on execution excellence, a strengthening product mix, scalable export operations, and prudent capital discipline. These foundations enable us to compete effectively on a global scale while delivering sustainable long-term growth. And as we enter the final quarter of FY2026, our priorities remain disciplined and focused. We are committed to monetizing overseas inventory efficiently, strengthening our margin mix through higher contribution from refurbished equipment and Excel, maintaining prudent working capital management, and continuing geographic diversification. Our near-term focus remains on maintaining financial prudence while pursuing sustainable and, most importantly, profitable growth. Our aspiration to achieve a multiple-time growth on revenue over the next 2-3 years remains intact, but supported by the expansion of overseas distribution, growth of refurbished exports, and scaling the Excel brand. At the same time, our sharpest focus continues to be on improving PAT and revenue quality rather than pursuing the turnover growth alone. Overall, the strategic steps taken during this period strengthens our global execution capability, improves our balance sheet strength, improves revenue quality, and the position of the company for sustainable and profitable growth over the coming years. I will now request our CFO, Mr. Sumit Bharelia, to take you through the financial highlights for the quarter.
Thank you. Good evening, everyone. Let me take you through the financial performance for the quarter and 9 months ended December 31, 2025. Starting with standalone performance, for Q3 FY26, total income stood at 9,179 lakhs as compared to 4,437 lakhs in Q3 of the previous year, reflecting strong year-on-year growth. Profit after tax for the quarter was 417 lakhs compared to 311 lakhs in the corresponding quarter last year, representing healthy growth of approximately 34%. For the 9 months period, standalone total income increased to 18,429 lakhs from 14,884 lakhs in the previous year, marking growth of around 24%. Profit after tax for the 9 months stood at 1,148 lakhs. This performance demonstrates continued export execution, strength, and scalability. Moving to consolidated performance, for Q3 FY26, total income stood at 4,535 lakhs. The group reported a loss after tax of 987 lakhs for the quarter. It is important to view these consolidated numbers in context. In H1 FY26, the group delivered consolidated PAT margins of approximately 9%, reflecting the underlying operating capabilities of the business. For the 9 months period ended December 31, 2025, consolidated total income stood at 17,094 lakhs and profit after tax stood at 108 lakhs. The consolidated results reflect the impact of strategic overseas inventory positioning and standard intercompany elimination under accounting standards. Margins embedded in overseas inventory are recognized upon sale to external customers, while associated operating costs continue to be expensed as incurred. This results in a timing difference between cost recognition and profit realization at the consolidated levels. As overseas inventory is monetized, consolidated revenue and profitability will progressively reflect this conversion. From a capital structure standpoint, we remain comfortably positioned post-IPO with continued focus on working capital discipline, margin quality, and sustainable growth. With that, we conclude our financial review and are happy to take the questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Aniket Madhwani from Step Trade Capital. Please go ahead.
Yeah, hello, am I audible?
Yes, sir.
Yes.
Yeah, so firstly, I just want clarification on the numbers. So, as you said, you are still intact to achieve around 800 crores in 3 years. So, as we see the numbers in this quarter, you are seem to be going in a downtrend kind of business. So this quarter has seen a significant dip in top line as well as bottom line. So I just want the clarification. What was the major reason behind it, and are you facing any challenges in achieving any orders from the clients?
Yeah, hi. So I would like to, Aniket, clarify a thing that we've not seen a downward trend. In fact, we've seen an upward trend of 27% of standalone export turnover growth, right, from about 140 crores to about 185 crores something. And on a consolidated level, the intercompany profit elimination, which essentially removes your profit of the inventory which has been exported from India, however, has still at overseas inventory on a books consolidated level, is reflecting the profit and turnover elimination. But if you actually add 185 crores plus, let's say we have about 70 crores of inventory where we had earlier, let's say 10-15 crores of inventory. So 185 crores plus around 70 crores of inventory which is at purchase cost, plus that shipping, refurbishment, etc. expenses. So मोटा-मोटी अगर उसमें 80-90 crores of turnover you added. So we are very much at approximately the same numbers where we were earlier, and 285-300 crores could be the realizable turnover if we just had sold this inventory, right? But it was a conscious call of the company to maintain inventory rather than just wholesale, we just sell machines. Moreover, our debt utilization as well has not been increased as per the increase in the revenue, I would say. So, and that is only working capital as well. So all the parameters, if you actually look at it, other than, just mainly looking at the consolidated numbers, will show you that performance has actually increased as opposed to decreased. Moreover, it has only been a short period of 2 or let's say some 2 odd months where we were able to actually see the IPO proceeds, etc. So there's a whole working cycle for our business, which has always been there, which can be concluded in a matter of 2 or 3 quarters, something like this, and a short time frame of 1 quarter or 2 months would, and calendar cutoff date cannot adequately represent what what is. I mean, it cannot translate into sales conversions because the sales conversion cycle is simply not. And that's what inventory is being affected. And it can be anyone's guess whether 70 crores inventory, so how much would that get realized into? And that is the whole thing. And your other question about the long-term revenue growth, we are still intact on that. We have the adequate working capital, and we are here for the long term, right? Matlab, 1 quarter or 2 quarter mein for calendar cutoff date, we are not here to present numbers, but we are here to build a business, and we are doing so effectively, I believe. And I don't see anything which is stopping us at all, especially in the current balance sheet itself, with such a strong inventory to achieve that kind of number. And in fact, these steps are in towards that only, to achieve those kind of numbers, and especially focused on that.
Sir, 50. Hello.
Yes.
So, sir,
Yes,
50% of the export is attributable to the Mexico, right? And if you look at the recent news of the Mexico, so Mexico has also put 50% tariff on the Indian export, right? So how do you see, and what will be the
company?
Hello.
Mm-hmm.
Hello. How do you see the future outcome of that tariff? And do we have any diversification strategy from the Mexico?
A large part of our revenue was coming from Mexico in the previous quarter. However, in the current quarter itself, we started diversifying. And even forever, we have had presence in more than 30 countries, selling machines in various countries, including UAE, Australia, South Africa, Netherlands, Europe, right? Mexico had taken a larger share of the revenue in one of the previous years. But we still have presence in multiple countries across UAE, South Africa, etc. And especially, there are 2 things. First of all, our product is not explicitly covered, and it's still not clarified whether our product is covered or not. So far, what the news is that our product is not covered in the tariff scheme of Mexico government. So during the end of that period, on 31st of December, basically, it was not exactly clarified whether our product will be covered or not, because the tariff was actually being implemented from the new year. So as on the reporting date, the purchasers and importers deferred their purchases to the new year. But as on date, there are no coverage on tariffs, and we are expecting actually higher demand in Mexico because they have launched some schemes where they are promoting sales of commercial equipment and construction machines and agriculture machines, wherein the depreciation, accelerated depreciation is being allowed the Mexican government to boost the sales of these machines. So actually, on the contrary, it's a positive news for us rather than negative.
Okay.
But
so
it is noted that 31st of December was a reporting date, which is where the numbers are reflected.
Okay. So it means Q3 dip in revenue is not on account of the tariff of the Mexico, correct?
Correct, exactly. It is just the difference of sales. We have a higher inventory. That's where the consolidated revenue is looking at. If the same inventory was sold on the exact same date of 31st of December, it would have reflected in the similar turnover level.
Okay.
Okay. And could you just give me the bifurcation of your revenue? I mean, is there any increase in your Excel brand? In H1 FY26, we have seen around 11% of your revenue comes from Excel. So, is there any increase in this quarter?
So capital goods and production takes time, so there is no quarter-on-quarter numbers increment like this. We have, however, placed orders for Excel, and we are getting orders for Excel. There are some new developments as well which we cannot share due to compliance purposes, and they are not publicly disclosed information yet. But we are continuing to expand dealers and distributors. And as I said, in this quarter particularly, there is no particular change in the numbers as which was given in the previous period.
And same for your new and used refurbished, the same proportion of.
Yes, I mean, that would be major. Yeah, that would be major. I mean, the business itself is as such that, it takes, as I said, to Mexico, let's say, 60 to 90 days of shipment time alone, then refurbishment time, customization time, procurement time, the whole cycle. So there is 120 to 150 days of cycle itself, right, which cannot be covered in one quarter. So any one quarter cannot give you any, clear picture about what has translated. It can show indicators, and the record build-up of inventory itself is the indicator. मतलब एक क्वार्टर में हम परचेज ही तो कर सकते हैं ना, परचेज करके सेल करके रियलाइज करके वापस उसको इन्वेस्ट नहीं कर सकते, राइट? तो दैट विल टेक टाइम. सो अभी जो दिख सकता था कि हम परचेज करना स्टार्ट कर चुके हैं, दैट्स व्हाई इट इज 70 करोड़ ऑफ रिकॉर्ड इन्वेंट्री बिल्डअप एज ऑन रिपोर्टिंग डेट. अब वो नेक्स्ट क्वार्टर में जैसे ही द नेक्स्ट फेज ऑफ द साइकिल विल गो, सेल्स एंड shipment and realization, so all those will start reflecting.
Okay, got it, yeah. Oh, okay, that's it from my side. Yeah, thank you.
Thank you, sir. The next question is from the line of Madhur Rathi from Counter Cyclical Investment. Please go ahead.
Sir, I'm new to the company, so if you could just take me through your business model. From where do we buy used construction machinery? Is it that we only buy used construction machinery in the country and export them, or we buy used construction machinery globally, and where do we refurbish it, and from where do we export it? And also, who are our principals in China from whom we are buying? And why can't they sell their machinery themselves? Why do they need Jinkushal to sell the machinery?
Okay. Sumit, would you like to answer that question?
Hello. Hi, Mr. Madhu. So, explaining about the business verticals which we are operating in, we are primarily working in 3 business verticals. One is new and customized accessorized machines of other brands. Secondly, refurbished machine, used and refurbished machine. And third is our own Hexel brand. So the whole business model is exports of construction and mining equipment, where we are providing a one-stop solution to our customers. The used refurbished machine is our primary model, and the Hexel is our own brand which we are developing now. So this provides a value addition to the customers in terms of cost saving and readily available of machines to them. Whenever a project is start, they need a complete mix of products. So we intend to become a one-stop solution for global supply.
So all that I already know, that you sell used machine under your own brand, and you export new machinery also. What I'm asking you, from where do you buy used machines?
All right. So we buy used machines all across India and the world. We refurbish them across either our own refurbishment center in Raipur in India, or our partner refurbishment centers elsewhere in India, or in our partner refurbishment vendors or contractors elsewhere around the world. That is our first vertical, where we buy used machines and then refurbish them and sell them. Second vertical is we buy new machines of other brands, customize them, add value, and then sell them in a similar model in either one of the locations that I have told you about earlier. The third vertical is Hexel, our own brand. And the question, why can't the Chinese people sell it themselves, lies in the same aspect why Apple or Hyundai or Caterpillar or, any other Samsung, LG. So why do brand in most engineering companies and engineering goods business, the design, R&D, engineering, marketing is retained by the brand and the company and the brand. And manufacturing is always outsourced to either, because it's a recurring, simple, mundane task of assembling products, sourcing them from various ancillaries, fabricating, manufacturing some of the things, and assembling them, right? So it's a recurring thing, again and again, wahi cheez wapas karna hai. So that is always outsourced to either Chinese or Indian or any other cost advantageous players. And that is the predominant global model we work in. And why can't all of these manufacturers not start something in their own? I mean, that is how the whole global supply chain economy works, because some people are good in manufacturing, some people are good in marketing, some people are good in design R&D. So I think that's how it works, right?
So basically, what I understood that we are buying second-hand machinery globally and refurbishing the machines in India as well as in other countries. And then do we sell? Do we have distributors, or we send to the or sell to like the end customer directly?
We don't sell to the end customers. We primarily have distributors in various countries, and we supply machines in more than 35 countries. And these distributors are the importers in their countries, and then they further supply to end customers in their time zone, in their language, in their geography, which is easier for them to cater as well.
So now, for example, if we buy a second-hand Caterpillar machinery and refurbish it and sell it under our brand, or we will sell it under Caterpillar only?
Our brand is only Excel, and that is our own brand, own design machine. We are competing with Caterpillar on that. And when we are buying other brand machine, which has been our historic business model, we do not change the brand. It is just like sale of used car or used mobile phone. No one changes the brand when they are selling used capital goods or used mobile phone or used car, right? If you're buying a Hyundai i20, it will still remain to be a Hyundai i20. It will not be Cars 24 i20, right?
Okay, so will we be able to match last year's revenue of 380 crore roughly this year, FY26?
It will remain to be seen, and we can comment on the current quarter. But as I said, we are confident on building a business. For us, all the right tick boxes have been checked with record inventory build up, with the right direction, with evaluating and assessing of building teams, senior leaderships from other OEMs, etc., to drive growth, to make our business organized. So rather than quarterly number focus, we're really focusing on the next 2-3 years targets that we have set for ourselves, and we're confident to achieve. It's still early on. It's first quarter after our IPO. Roughly 2 months have passed after the IPO on this date. But I think all the parameters and the initial indicators seem to point in the right direction for us.
Right. Sir, also our current liabilities have increased from 5.9 crore at FY25 end to 26.1 crore in H1. So why was that?
Mr. Sumit, can you answer that?
Sir, can you please repeat the question and from the source which we are referring?
Yes, sir. Yes, sir. Sir, so our other current liabilities have increased from 5.9 crores to 26.1 crores between FY25 end and H1 of FY26. So, if you could help us understand why has that increased so much?
Okay, you are to H1 numbers. Let me check once. And
yes, sir.
Please give me a second.
Yes. Sir, in the meantime, I had another question, sir. What we understand from some of the component manufacturers of these off-highway vehicles and construction and mining equipment is these Chinese players are like top 5 out of the top 10, top 5 would be Chinese in off-highway market and the construction market. Sir, so is that why we have introduced this Excel brand where we are just assembling these machinery for Chinese and selling it in India? Is that understanding correct?
No, completely wrong, actually. We are not the contract manufacturers for anyone. We are actually the brand owners of Excel. We are the brand who is getting it made from one of the Chinese factories for us, as per our design. Our design engineers are from our USA office in Florida, and we aspire to become one of the top 10 brands in the world for sure in the long run.
Right. Sir, so right, sir, got it. Sir, on the other current revenue, other current liabilities, you could help us understand.
Hello.
Yes, sir. Hello.
He'll
Yes, sir.
He'll come back up with the question, maybe on the mobile phone or something. Meanwhile, we can take up the other questions as well. We'll get back to you on the
Okay, okay. Sir, so what's our total capex going forward?
We are an asset-light model. We don't really, have a clear, in line with the objects of the issue, we don't really have a fixed capex or something like that. We are an asset-light model. That's why we are getting, the machines itself manufactured by another company, just like Boat or Samsung or LG or whatever. And I don't see any, as of now, as on this date, we don't have any plans of that.
And sir, what is our working capital cycle like? What is the credit period that we give to our distributors? Do we buy machines on credit from our suppliers? And how much inventory on a steady state basis do we keep? So if you could just explain us the steady state working capital days in our business.
All right. So the inventory question, we have increased our inventory, which is the whole, agenda that we have highlighted today. So the inventory has been increased to 70 crores. So whatever we did earlier has changed now. The working capital cycle was earlier, I believe, 120 to 150 days, something like that, which will now again remain to be seen since we have increased our inventory at overseas level and planning retail execution. And the credit days is 60 to 90 days is the delivery period and logistics cycle that we, have to countries like Mexico and, probably 60 days to South Africa, etc. And usually the credit period that we give is, 30 days or something like this after delivery. So the logistics period gets recorded and in the delivery timeline, basically, even when the control of the BL and the goods are in our hands, the logistics period gets recorded as credit period in our books or receivables in our books. However, in the books of the customer, they, in a practical basis, they would essentially consider credit only when the goods have received in their goods have been received in their hands. So that is there. So even at 150 days of credit in our book, essentially 90 days is just the logistics period and delivery time. It's just like if someone is delivering goods from Pune to Bombay, that 1 day of transit time does not count. But if someone is delivering goods from Kashmir to Kanyakumari, there will be a considerable transit time. So the credit period may not be considered by the customer unless he gets the delivery of the goods. So this is the essence. And I would request you, if you can focus the questions more towards this quarter and this earnings call would be more fruitful for everyone's time. And we can happily take one-on-one questions from you. You can connect directly with us or our team or our IR team, for the basic questions which have been covered prior.
Right, sir. I'll get back in the queue.
Thank you, sir. Ladies and gentlemen, to ask a question, please press star and one now. Participants who wish to ask questions may please press star and one at this time. The next question is from the line of Jayesh from HDFC Securities. Please go ahead.
Yeah, thank you. Thanks for the opportunity and good evening. Am I audible?
Yes,
sir.
Yes, Mr. Jayesh.
Yeah. So my question is that what is the current order book or revenue visibility for the next 12 months or 18 months maybe?
Hi, Mr. Jayesh. So usually, as you can see in, OEMs or dealerships or automotive or construction equipment, rather than a current order book, which is predominantly seen in government contracts or something like this, I believe inventory and other things like, the demand in general in the market can be seen in parallel to the revenue visibility. So in that aspect, there is no current order book as such. There are some orders in pipeline, but we don't maintain that as an order book 200 crores of government koi humko order mil gaye and all. But we have commitments from our dealers, especially in Excel, that which we disclosed in the news as well, 100 machines in the next couple of years and something like that. But they will not meaningfully give you the exact revenue stream because, as I said, we are not dependent on that order alone. We have other marketing efforts, sales efforts, scale-up efforts, and year-on-year standalone growth, which is, the most measurable performance which we can see and measure in terms of visibility in India. 140 crores, 180 crores, 185 crores, we have done in, December period. So that can show that we are growing and the inventory has been built up. And जैसे वो sale होगी, तो that will get converted into revenue and turnover. So with the inventory, I think you can get a decent idea of revenue visibility going forward.
Okay, sir. So majorly that means so you're dependent on marketing and strategies, correct?
थोड़ी सी आपकी आवाज ब्लर हो गई जय जी, if you can repeat kindly.
सर मैं कह रहा हूँ सर, इसका मतलब सर दैट मीन्स आप ज़्यादातर मार्केटिंग पर डिपेंड है, मार्केटिंग एंड स्ट्रेटेजी.
Yeah, sales and marketing efforts for the brand building. And then मतलब अगर इन्वेंट्री है, माल है बेसिकली, तो बिकेगा ना. That is the basic concept of used machine. कि अगर माल है आपके पास तो वो बिक जाएगा.
जी करेक्ट सर. एंड सर सेकंड वन will be that how much of the recent growth is attributable to refurbished equipment versus the new or customized machines?
Okay, I believe Sumit ji, would you say that numbers? I believe 40. So used refurbished machines में current year में हमारी growth है, and new customized machines of other machines का share जो है वो हमारा Hexel brand लेके जा रहा है, because obviously हम ग्रेजुअली, क्योंकि हमारे पास इतना बड़ा कस्टमर बेस है न्यू कस्टमाइज मशीन ऑफ अदर ब्रांड्स का, जो बैकलोडर्स हम बेचते थे, तो वहाँ पे हम धीरे धीरे अपना खुद का ब्रांड पुश करते जाते हैं, राइट. तो वो शेयर इधर इधर ग्रेजुअली ट्रांजिशन हो रहा है. एकदम से सडन नहीं होगा, ऑब्वियसली न्यू ब्रांड है, एस्टैब्लिशमेंट में टाइम लगता है. अभी तो हार्डली अपना मतलब ईयर 1 चल रहा है, सो दैट विल टेक टाइम. बट सुमित जी, व्हाट इज द परसेंटेज ऑफ मिक्स इन टर्म्स ऑफ वैल्यू और इन टर्म्स ऑफ यूनिट्स?
Sir, in 9 months 2026, the new machines have taken 49% share, old machine 42%, and Hexel brand 8.6%. So overall, the new machines have been reduced from 61% to 49% of other brands. The Hexel have increased from 1% to nearly 9%, and the refurbished machine segment has increased from 38% to 42% in 9 months 26 consolidated figures. Hello, was that clear?
Was that clear, Mr. Jayesh?
Yeah, sir. Okay. Thank you, sir, and for that answers. And sir, apart from this one more, that can management quantify the contribution from repeat customers versus the new client additions regarding the contribution?
We don't have the data exactly currently, but it remains, मतलब इस क्वार्टर का, but it remains same. As I said कि मतलब हमारा जो साइकिल है वही 150 दिन के आसपास का रहता है, राइट. तो अभी एक क्वार्टर में उतना दिन तो होते ही नहीं, तो जो पुराने ऑर्डर्स वगैरह थे वही एग्जीक्यूट हो रहे थे, और मतलब सप्लाई चेंज है, राइट. एंड इट्स लाइक दैट. बट आई बिलीव 70% would be our repeat customers and 30% new. But going forward we are also eyeing to, क्योंकि 2-3 चीजें हो रही हैं. एक तो इन्वेंट्री बिल्डअप भरी है इसी नहीं, तो उसको ऑब्वियसली मार्केट करेंगे न्यू कस्टमर को भी, तो न्यू भी खरीदेगा. एंड ओल्ड का जो चैनल है वहाँ पे तो कंटिन्यू करेंगे सप्लाई चेन.
ओके. एंड सर, आने वाले 2 से 3 साल के लिए, so with entry into the new geographies, so which regions are expected to be the primary growth drivers for you?
We are definitely entering into new geography, and हमारे कुछ डीलरशिप भी साइन हो रहे हैं, but it is still publicly disclosed information, so I cannot tell that. But yeah, I mean, see, we were in 35 countries in all 6 continents. Latin America एक major, Mexico एक major revenue growth था. I would say the other Africa, Middle East, and European countries will also start to throw in a lot of wins. I can say this. We are hiring team members. See, I'll be very honest. We are hiring team members from very big brands in our field to grow, in these various regions that I've told you. We're dedicatedly hiring, creating organizational structure, regional sales head, regional sales manager, global sales head, and all these people. So initially तो हमको impact आएगा ये सबका, but यही हमारे long term growth driver होंगे. And from promoter led business to a professionally driven business, which is the need of of the company to become a truly global brand with Excel. This is our aim and intention, and we are doing it. And we are spending on that. We are spending on marketing, exhibition, manpower, and we are eyeing like 1 crore plus wale manpower a lot. So we are going to invest in these. They'll be expensed out in the P&L initially, and उसमें लगेगा कि कैसे क्या why are these expenses coming up, but we are very happy to take up these expenses and investment, क्योंकि आज के कुछ क्वार्टर्स में ये एक्सपेंस आएंगे, बट 2-3 साल में यही हमको हमारे टारगेट को अचीव करवा के देंगे.
ओके जी सर. वैसे इसके अलावा पैट मार्जिन फर्दर अचीव करने के लिए
Sorry to interrupt, Jay sir. There is lot of background noise from your side.
Yeah.
ओके सर. नाउ एम आई ऑडिबल? आवाज सुन सकते हो?
Yes.
सॉरी फॉर द डिस्टर्बेंस. सर मैं ये पूछना चाहता था कि पैट मार्जिन फर्दर अचीव करने के लिए, जो कि करंट लेवल पे सर अभी आपकी 5% है, तो उसके लिए सर क्या की लेवर्स रहेंगे और भी अचीव करने के लिए?
I'll tell you a simple thing कि someone else also asked कि भाई 600-700-800 करोड़ का आपका रेवेन्यू कैसा दिख रहा है, हो पाएगा कि नहीं. अभी तो वो मतलब दे आर सम कंफ्यूजन कि अभी ग्रो हो रहा है नहीं हो रहा है क्या है, राइट. सो आई लाइक टू क्लैरिफाई, अगर एक वेरी सिंपल लॉजिक है, अगर हमारे 120 से 150 दिन का वर्किंग साइकिल है, 2 से 2.5 गुना हम लोग पैसा हाल में कमा रहे हैं, राइट. तो आज मतलब 90 करोड़ हमारा IPO फंड से हमको कंपनी में इंडक्ट हुआ था, उसमें BCP ECB ये भी करेंगे तो कुछ 80-90 करोड़ के आसपास मोटा मोटी हमारे पास वो है. हमारे पास हमारे खुद का भी मोटा मोटी 80-90 करोड़ पहले से नेटवर्क कंपनी में लगा हुआ है, एंड उसके अलावा 120 करोड़ की सैंक्शन लिमिट हमारे पास थी, राइट. तो मोटा मोटी अगर आप देखेंगे तो 300 करोड़ के आसपास का हमारा ऑलरेडी वर्किंग कैपिटल बेस है, जिसमें हमारा कोई केपेक्स या ऐसा कोई मेजर इन्वेस्टमेंट या जो खर्चा होने वाला नहीं है. हाँ, 5-10 करोड़ इधर उधर मार्केटिंग यहाँ वहाँ जो भी लग सकता है ओवर द पीरियड ऑफ टाइम, और मैन पावर ये वो इंक्रीज करने में इनिशियली जाएगा, बाद में वो रेवेन्यू देगा. बट अगर आप देखेंगे कि मोटा मोटी 300 करोड़ को अगर हम चर्निंग कर लेते हैं, मतलब 2 से 2.5 गुना, तो 700-800 करोड़ तो हमारा बेसिक मतलब रोटेशन नहीं हो जाएगा कि कोई भी प्रोडक्ट जो हम एग्जिस्टिंग की बेच रहे हैं एग्जिस्टिंग कस्टमर को बेच. बट हमारा उसके बाद क्या होगा, वो हो जाएगा, फिर वो सेम लेवल ऑफ मार्जिन सेम लेवल हर चीज में होते जाएगा. बट वो 800 करोड़ का हम वापस नेक्स्ट डबल ट्रिपल या मतलब 2-3 हज़ार करोड़ तक कैसे पहुंचना. तो उसके लिए इट इज वेरी नेसेसरी दैट वी टेक द स्ट्रेटेजिक इनिशिएटिव्स एंड फाउंडेशन बिल्डिंग करेंटली. एंड हमारा फोकस अभी उसमें कि हम वो फाउंडेशन को बिल्ड करें, टीम को लाएं और मार्केटिंग प्रेजेंस, ब्रांड प्रेजेंस को क्रिएट करें, ताकि एक ब्रांड रिकॉल बने एंड ग्लोबली वी बिकम वेरी known in the space even more and more, and team can drive it, and the growth drivers can become these people. तो मार्जिन का जो आपका क्वेश्चन है वो यहाँ से आएगा हमारा, जो हमारी प्लानिंग है कि when the team is there, इनिशियली हो सकता है मार्जिन अभी कुछ क्वार्टर में फोरगो करे, एंड आई अंडरस्टैंड, आई मीन फाइनेंशियल एनालिस्ट ट्राई टू जस्ट लुक एट द बिजनेस फ्रॉम बुक्स एंड क्वार्टर्स में क्या है. बट हम लोग आज लुक एट द फंडामेंटल, राइट, अंडरलाइन क्या हो रहा है, क्या कर रहे हैं. तो सिर्फ पैसा घुमा के जर्नी नहीं करना है हमको. वी वांट टू बिल्ड अ ब्रांड एंड बिल्ड अ बिजनेस फॉर द लॉन्ग टर्म, एंड that is what we are doing, and that is what we believe will give us the margin.
Okay sir. And sir, जैसे कि ब्रांड XEXL
Sorry to interrupt, Jay sir. May we request you to return to the question queue for follow-up?
Okay, no worries. Thank you sir. Thank you so much for the answer. Thank you.
Thank you, sir. Ladies and gentlemen, to ask a question, please press star and 1 now. Participants who wish to ask questions may please press star and 1 at this time. The next question is from the line of Praneeth, an individual investor. Please go ahead. Mr. Praneeth, your line has been unmuted. Please go ahead. So as there is no response, can we go ahead?
Hello, can you hear me? Hello.
Yes, sir.
Sorry. So thank you for the opportunity. So first, I wanted to ask regarding the returns policy. So how does it work in terms of warranty and returns for a refurbished and also new equipment? How does it work usually, depending on the segment?
So for our own brand Excel, we give 2 year and 22,000 hours warranty. And usually, sir, the goods are so big, that in any return policy, usually the shipment is usually covered by the customer, right? So these are OTC large goods. Mobile phone पे नहीं कि छोटा से डब्बे में पैक करके भेजो, right? So returns are usually non-existent kind of, because the cost of returning itself will be much higher than the cost of repair or buying a new part and installing a new part on that machine. The entire principle of mechanical engineering, or machines lying the factory, machines can get repaired again and again by either repairing the engine, refurbishing the engine, or the transmission, or other components, or hydraulics, or whatnot, right? And these are smaller parts which can be shipped easily by DHL or anything else, or import air cargo, and it may be easier. And this is what happens. A used truck or a used machine, it can go on and on and on and on by getting repaired and years and years and years. And that's why government even imposed laws that 15 years more than the age of machines or trucks, or not machines, trucks, after 15 years cannot be used on roads. Because otherwise what was essentially happening in all the countries is, people were just repairing their own machines or trucks and using it for 50 years or whatever, X number of years. It can go on and on. So that is where returns are non-existent virtually. Warranty, as I said, for our own brand, we give warranty. For used machines and refurbished machines, we are the wholesale seller. Warranty is usually covered by the distributors. So the end distributor incorporates and builds it up in their margin, and they give warranties. And again, the concept is the same. They buy spare parts either from us or from the local vendors or from anyone else, and do it.
So it's basically seller warranty, it's not manufacturer warranty.
Exactly, for used machines, because used machines, we're not essentially the manufacturer. And for Excel brand, we are the manufacturer, so we give warranty back to back on that. And that is covered by our suppliers and our factory. And for example, we are using Cummins engine. So Cummins is giving a warranty, which we cover it back to back. Cummins is a globally established brand, which has service centers everywhere. So with the serial number of the engine, etc., they give the warranty.
So basically the producer who's already doing the contract manufacturing for you covers the warranty across the globe.
Yeah, that's it. Yeah.
Understood. And one more question is regarding our expansion beyond the mining sector. Is there potential for agri, or how does the management think about expanding the sector to other segments like agri, when it has similar use case and similar presence?
Our focus has not been that sharp over there currently. But yes, we are present in a minor level on agri verticals, including agriculture, equipment, tractors, etc. as well. It is an ancillary, I would say, product segment as well.
And one more question regarding the beginning of just to get some context as an investor. So I understand that in the last Concall, you mentioned that your family has been into the mining sector for the last 50 years. Could you also explain how?
I'm sorry? How? You mean to say how? Hello? I think we've lost you. I'll still give a general broad view context that our family, as my grandfather started mining contracts in south of Chhattisgarh in the SUVI Steel Plant, which is the flagship unit of Steel Authority of India Limited. And my father was also into mining contracts and contracting. My uncles are into mining contracts. They even execute big contracts right now for BHP or participate in tenders for WCL, etc. So primarily our family has been users, and even our extended family, cousins, etc. all have been users of construction and mining machines. We have a very first-hand insight overview of, not just an overview, very in detail understanding about how machines work, what do the customers want, because we ourselves are customers on the other side of this, and what problems arise and what can be repairable, how to repair it in a cost-effective way. And all those insights have really gone into our current business as well, where we refurbish machines or design machines in, keeping in mind the requirements and ease and comfort of the customer. And then we are trying to make Excel as a customer-oriented brand.
Thank you, sir.
Was it? Yeah.
Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants, please limit your questions to one per participant. The next question is from the line of Madhur Rathi from Counter Cyclical Investment. Please go ahead.
Sir, thank you for the opportunity once again. Sir, if you could help us understand what is the margin profile for refurbished equipment versus our own branded equipment?
12 to 14% levels is what we expect and see estimate usually on PAT level for refurbished used machines. And for our own brand, it's early on. There are many one-time expenses, including onboarding of staff, salary, paid staff, marketing, website, trademark registration, whatnot, right? So, but going forward in the years to come, we expect 12 to 15% on PAT level basis for our own brand as well, without any capex.
Okay. And sir, our employee expenses have increased, I think. So at this level of employee count, sir, how many machines can be refurbished?
I don't think that will be a direct analogy because employees include a lot of white collar and senior managers, which are probably in various sections, including accounts or whatnot, right? So the capacity as of now doesn't change exactly for the refurbished machine. It is primarily restricted by the working capital available. And since, as we informed earlier, that we have designated partners, channels, etc., for refurbishment as well. So money is the raw material here. And, if you have more working capital, you can simply, as you can see, we built up inventory since the IPO process. So we can really increase the inventory again, and we can refurbish more machines if you have more money to invest in refurbishment and the cost of goods purchased.
Sir, so why did we build inventory? Why don't we just sell it to our distributors instead?
No, so exactly. This is, अगर मेरे पास let's say अक्टूबर को लिस्टिंग हुई, अक्टूबर में पैसा आया, तो एक बार में तो पैसा रिलीज नहीं होता, वो मतलब इट्स पीरियड, राइट? एंड उसके बाद डे वन में मैं 50 करोड़ का कुछ खरीद नहीं ले सकता, सो प्रूडेंट टू डू इट ओवर द पीरियड ऑफ 2-3 महीनों में। अगर मैं कुछ खरीदूंगा उसको, तो वो बेचने में टाइम लगेगा ना। मतलब मैंने अगर दिसंबर में कोई चीज़ खरीदी और मेरा वर्किंग साइकिल 150 दिन का, हैवी कैपिटल गुड्स से 15 दिन ट्रांजिट टाइम में लगता है कि मैं इंडिया में ही पॉइंट ए से पॉइंट बी में ले जाऊँ, राइट? अगर रायपुर से बॉम्बे ले जाना है या दिल्ली से रायपुर लाना है, तो दोनों में 15 दिन लग जाता है। तो दिसंबर में अगर कोई परचेज किया तो उसको मैं बेच कैसे सकता हूँ? मतलब बाय ऑल प्रैक्टिकलिटी कैसे बेच सकता हूँ मैं उसको दिसंबर में, एज एन 31 दिसंबर? तो इट इज नेचुरल थी ना, अगर कोई चीज़ परचेज करेंगे तो इन्वेंट्री बिल्डअप हो जाएगी। अब उसको या तो डे वन में सेल कर दो एज इट इज एग्जैक्ट ट्रेडिंग में, जिस दिन खरीदा उसी दिन बेच दो, और या तो फिर मतलब वो तो टाइम लगेगा ना अगर कुछ करना है। And essential to note over here is also that we were still able to export from India, but the end of the cycle, including that 60 to 90 days of delivery period, और वो सब होने के बाद हमने उसको नहीं बेचा। So that is a sales cycle which fundamentally मतलब मैक्रो लेवल पे अंडरस्टैंडिंग कैन बी कि 2-3 महीने में the sales cycle of 150 days cannot be completed, which is what is reflected over here. वो इन्वेंट्री स्टेज तक पहुंच पाया।
Understood. Sir, and is Pune-based Vision Infra Equipment our competitor or our customer or supplier?
No, they're not our customers or suppliers. They are in a similar domain in one of the verticals, but not exactly same. The primary business is renting of machines. And
Okay.
I believe that's where most of their PAT and revenue comes from. However, they are, I don't know what exactly, but yeah, we are into our own brand. And we are into our core businesses in refurbishment of construction equipment, and we do that.
Okay, sir. Thank you very much.
Thank you, sir. A request to participant to limit your question to one per participant. The next question is from the line of Praneeth, an individual investor. Please go ahead.
I'm really sorry the call got cut. Thank you for the follow-up, though. Just could you re-answer my old question of how did your family enter into this business, and is the mining operation still going on?
I'll answer that question again and answer it again. And if there's still further queries, I believe we can take it one-on-one with Mr. Praneeth and our IR team. Our family, my grandfather started mining contracts in south of Chhattisgarh, maybe 55 years ago, for Bhilai Steel Plant, which is the flagship unit of Steel Authority of India Limited. And ever since, iron ore mining has been core part of our family's business interests and operations. My father, when he entered the business, he started EPC mining contracts and other contracts in Raipur for stone quarries, limestone, etc. as well, road railways. And even my cousins and uncles currently from our, same first cousin family are heavily involved in mining contracts in WCL, BSP, and other mining companies, private or public. So that is how we are related to mining and contracting, and where we have first-hand insights of how the machines are used, how they are repaired, what problems arise, what problems do the OEMs currently, the Western OEMs currently in the market, give to customers. And that's how we have been able to have so much of customer insights and solve problems of customers in the aspect of designing our own brand in Excel. And also when, repairing used and refurbished machines or customizing any machine by knowing what lacks in what machine and solving that problem in a cost-effective way. That has been our USP. That is why we are a 3-star export house recognized with the government of India. And that's why we have had such a recurring customer base where the same customers buy from us again and again and again. And now with more working capital at our hand, we are ready to, scale this up, expand our customer base, cater to our existing customer base as well, and, to grow strength to strength from there.
Understood. I understand that the company has clearly a proper...
Sorry to interrupt you, sir. May we request you to come back in the follow-up question for question queue?
Sure, thank you.
Thank you, sir. Request to all the participants to limit your question to one per participant. The next question is from the line of Hemant from Abar Group. Please go ahead.
Hi, good evening, sir. I have a very specific question. When I was going through your consolidated results, I would just like to understand, just because we have strategically moved our inventory to our overseas subsidiary, the cost of movement of those inventory has impacted consolidated profit. Is that the major reason?
Yes, you got it exactly right, because what happens is, according to India, in very plain English, all the expenses are recorded for any movement, right? And these are major expenses, including shipping, refurbishment, etc., salary, whatever is the expense, it will get recorded. But the profit and turnover gets eliminated. If there is inventory, obviously it got built up, and there is not just purchase cost inbuilt on it. There are other costs as well, right? Which gets added to the value. And when that will get sold, the entire gross profit will become the PAT, because the expenses are already booked, but the sale expense is not booked. So this is what shows, and this is called intergroup elimination or something like this, and that profit elimination, turnover elimination. And since we have such a high level of inventory, so all that inventory elimination is happening. So which is why it is showing, in a such a drastic way, like a very high estimate. Because earlier we used to have 10 to 15 crores of inventory. Now it is 70 crores of inventory. So that is why the swing became very large for this. But it is what it is. It's balance sheet assets. Things are very low.
Then we can expect a sharp reversal in coming quarters? As and when it is sold to
like this, I think it will not be too prudent. But as I said, if anyone gets 70 crore की inventory, so what will happen with that? And when that sale gets booked, तो जो अभी sale and profit eliminate हुआ है, वो तो add ही हो जाएगा ना basically. पूरा expense तो पहले ही book हो चुके हैं उसके पूरा. वो gross level पे add हो जाएगा directly.
Okay. Thank you so much.
Thank you, sir. The next question is from the line of Praneeth, an individual investor. Please go ahead.
Yeah, thank you for the opportunity again. So I was just wondering that the management has mentioned money is the raw material. I'm wondering why you face any other competition, because if capital is the only requirement, there can be many other players in the market. So I was just wondering, I understand the deeper insights on how the machine works and you have the partnerships. Like, could you explain why does Jinkushal have a much more stronger market presence, and why does it continue to have its market share?
I mean, for what? For which vertical of ours?
The refurbishment and the OEM, both.
So we are a mechanical engineer family, right? I'm a mechanical engineer. My father is a mechanical engineer. And I mean, in every business there will always be competition. Competition is healthy. And if anyone gets, why can't the other guy or the competitor be better? But we are the largest exporter in India for non-oil construction equipment for a reason. we are awarded exporter of the year and whatnot for a reason, right? And it will amount to self-boasting and trade, but we're pretty hardworking, I would say, if not intelligent as well. And this is what we've been trying to do. We're working around the clock. And our people who know me or our family, they will know that, we simply are very hardworking. And one thing my college friend told me as well, back in college was, in whatever industry I am in or whatever work I do, I'll definitely outsmart and beat the competition. And I hope to have, moved in that direction somewhat and achieved it at some level. And we hope to carry it on as well. I mean, that is our intention and goal. Competition is there, but we do, by hook or crook, beat our competition and be the best in our league and segment.
Got it. And one more question regarding domestic market.
Sorry to interrupt you, sir. May we request you?
Just one last question. Regarding domestic market, I understand that we export almost all, right? I was wondering, is there no domestic market available for this particular refurbishment and OEM refitment? I'm pretty sure there is. I'm just wondering, why did we stay away from that market?
Well, the government of India promotes exports from India. We take pride in the fact that, we earn valuable foreign exchange for the country. We are a three-star exporter, was recognized and awarded by the government of India. So we basically are following the footsteps and guidelines of the government, right? And if we are catering to the export market, the taste preference and price point preference, etc., the dynamics are different for the Indian market. With a limited size of capital, there's only so much that you can do. Right? So the kind of product that we are making, the kind of ecosystem and teams we have, and the entire kind of supply chain and model we have, is more suited for the export market. It's giving us fair enough revenue and fair enough profit margins. Earning in dollars is always better. So that's what we're doing. And India is all about scale and capital. When we have the intention and strategy to deploy as much capital to gain volume at lower margin level, we'll probably enter that as well.
Understood. So it was basically capital allocation, the fact that we wanted to prioritize that, then we might come here once we saturate that.
Exactly, we're a Marvel and family. We run for, we chase profits, and whenever we got higher profits, it's as simple as that, whether it be Mexico in any 1 year, or whether it be South Africa or Dubai in any 1 year, or Netherlands or UK in any 1 year. We have historically said that with a limited amount of capital pool in a highly intensive, like working capital intensive, basically, capital goods industry. And rather than optics, we really focus in the foreign and business model. Right? And we have developed so much customer base in so many countries. And now with incremental capital, we can cater to multiple, geographies. And even like Mexico had this tariff pause and different and temporary stage where people were, postponing their orders to few next months or something. We had South Africa, etc. We focused there. And we had the customers. We pushed machines over there, and we were able to immediately pivot. So this is the whole point, right? Rather than optics or putting things on books or numbers or something, we really focus on underlying business trends, and that's what we are doing even now.
Understood. Thank you so much for your patience. I was just wondering one more thing is regarding who.
Thank you, sir. As there are no further questions from the participants, I now hand the conference over to Ms. Chandni from Equibridgex Advisors Private Limited for closing comments.
On behalf of Jinkushal Industries and Equibridgex Advisors, I thank everyone for taking the time to join today's earnings call. If you have any queries, you can connect to us at info@equibridgex.com. Once again, thank you for joining the conference. Thank you, Abhinav sir. Thank you, Sumit sir.
Thank you, everyone. Thank you.
On behalf of Equibridgex Advisors Private Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share, and subscribe to Concall India for latest upcoming con calls.